The S&P 500 and Nasdaq fell for a second straight session on Wednesday. Treasury yields jumped after manufacturing data indicated inflation is likely to remain stubbornly high, while comments from Federal Reserve policymakers supported more interest rate hikes. The Dow, alone among the major indices, finished a hair higher. It got a boost from Caterpillar, which saw its shares rise after the construction equipment maker said it had reached a tentative deal with a union that represents workers at 4 of its facilities. But the Nasdaq lost 2/3%, while the S&P 500 dropped about 0.5%. The yield on 10-year notes topped 4% for the first time since November, after the Institute for Supply Management's survey showed U.S. manufacturing contracted in February and prices for raw materials increased last month. Fanning fears about persistent inflation and rising interest rates, Minneapolis Fed President Neel Kashkari, a voter in the rate-setting committee in 2023, said he is open-minded on either a 25 basis point or a 50 basis point rate hike in March. On a similar note, Atlanta Fed President Raphael Bostic wrote that Fed policy would have to remain tight well into 2024. These statements from Fed members come as no surprise to Johan Gahn, head ETF market strategist with Allianz Investment Management.
They're going to keep their steady hand on the tiller, so to speak, on the hawkish tiller in this case, pushing the rates up further. They're going to keep the rates up there for longer. And they would much rather be wrong by cutting rates late. In other words, inflation, that way they can win the inflation war, but it would be at the expense of a potential recession. They'd rather do that than to cut rates early. And in other words, aiming for a soft landing, but at the same time having resurging inflation risk on the back of that.
Besides Caterpillar, other stocks of note include Tesla, which dropped ahead of its Investor Day event. The electric automaker is readying a production revamp of its top-selling Model Y, Reuters reported, citing people familiar with the plan. Also Novavax, which plunged after the COVID-19 vaccine maker raised doubts about its ability to remain in business and announced plans to slash spending as it prepares for a fall vaccination campaign.
After a Tesla investor event that ran over 3 hours at the company's Texas HQ was short on new details, company shares tumbled more than 5% in after-hours trading on Wednesday. CEO Elon Musk had been expected to launch a much-awaited small affordable electric vehicle that would broaden his brand's appeal and fend off competition. Instead, he focused on a new Tesla Gigafactory being built in northern Mexico. It's first outside of the United States, Germany, and China.
This is not, to be clear, moving output from anywhere to anywhere. It is simply about expanding total global output. So it's going to be good.
Musk was joined on stage by an array of engineers, a nod to Tesla's attempts to show the depth of its executive bench beyond Musk. Senior executives did outline their commitment to cutting production costs, with Chief Engineer Lars Moravy saying the company expects to build its next-generation vehicles for half the cost of the current Model 3 or Model Y.
Elon alluded to the fact that Mexico will build our next-gen vehicle, but we will also be doing that in our other plants. And so it's really about getting them all up and running. We expect that to be a huge volume product, and we're going to move that quickly over the next couple of years.
Tesla is the world's most valuable automaker, but its shares have seen wild swings. Under pressure from rivals and a weak economy, Tesla has in recent months cut its prices to boost sales. And Musk said Wednesday lower prices are key to driving sales. Capturing the mass market is critical to Tesla's goal of being able to make 20 million vehicles a year by 2030. Tesla's CFO, Zach Kirkhorn, said the company must invest 6 times what it has already to hit that target. A bill that he said could add up to $175 billion.
Tough times for U.S. electric vehicle startups. Demand is evaporating as potential customers look for deals or hold off on purchases altogether. Quarterly reports from luxury sedan maker Lucid, pickup and SUV maker Rivian, and electric semi-truck maker Nikola all indicated weakening interest for their newer products. Industry experts blame price cuts by Tesla and the availability of cheaper EV models from traditional automakers. One exception is Fisker, which just launched a more competitively priced SUV, but has only produced 56 of them so far. Recent price cuts from Tesla on its Model Y make it $20,000 to $30,000 cheaper than vehicles from Rivian and Lucid. Analysts and executives of EV startups also say rising interest rates and inflation are cutting into demand. Lucid reported a slump in reservations, while Nikola said demand would not rebound anytime soon, and Rivian cut its 2023 production, citing supply chain issues. It also did not provide current orders, a number it has updated every quarter. A venture capitalist who invests in EV-related companies tells Reuters demand for these newer vehicles should improve next year as the supply chain improves. Shares of Rivian have lost 3/4 of their value over the past year, while Nikola is down about 70% and Lucid a little less than that.